Hello everyone. Today we are taking a deep dive into this Reuters story, Nasdaq, to launch new products ahead of extended trading hours plan. We are going to break down exactly what happened here and what the real risks are that every investor should know about. But before that, you are watching Let's Decode the News, where we take the biggest business and finance stories and decode them so anyone can understand. If you are not subscribed yet, hit that button right now. So let us get into it. Nasdaq said on Thursday it will roll out a suite of products to support its planned extension of U.S. equities trading. And I want you to sit with that for a second. This is not a small announcement. Nasdaq is the exchange where Apple, Nvidia, Microsoft, the biggest tech companies on the planet, are listed. When this exchange rolls out something new, the entire market pays attention. These products will cover all three of their equity exchanges, from data analytics all the way to full market visibility. This is serious infrastructure being built for something big. Here is the number that changes the whole conversation. To 23 hours a day, 5 days a week. 23 hours. Think about what that actually means in practice. The market would only be closed for one single hour, somewhere between 8 in the evening and 9 at night Eastern Time. That is it. The rest of the day, the rest of the night, open for business. This is not a tweak to the schedule. This is a complete reimagining of what a trading day even looks like. And this is not just being built for Wall Street institutions. This is being built for every investor sitting in the wrong time zone. Now here is what nobody is really talking about. International demand for the lucrative U.S. equity market has surged in recent years. And where exactly is this demand coming from? Regular people, retail investors, people who used to be limited to their own local markets and their own local stocks. Now they have a smartphone, a discount broker, and a very strong desire to own American companies. This trend accelerated dramatically after the pandemic, and it has not slowed down one bit. Nasdaq sees it, and they are responding. Here is the line that should make you think twice. Driven by rising retail participation, increasing financial literacy, and easier access to digital trading platforms, these three things are happening at the same time, and that combination is powerful. When more regular people enter markets, when platforms get easier to use, when financial education spreads, exchanges have to expand their capacity to match. Extended hours are the direct answer to that global demand. People around the world want U.S. stocks on their own schedule and their own terms. Nasdaq is simply giving them that door. But before you brush this off, look at what happened next. Nasdaq expects the expanded trading to begin on December 6th, subject to regulatory approvals. That phrase is doing a lot of heavy lifting right there. Regulators have not signed off on any of this yet. And while December 6th sounds close, extended hours trading raises real questions about market fairness and whether everyday investors are actually protected when liquidity gets thin at 2 in the morning. These are not small concerns. They are the kind of concerns that can slow things down significantly. The institutions will have their algorithms running around the clock. The question worth asking is, will the regular investor be ready for that environment? Here is the final number you need to know. The new 23-hour trading day is expected to run from 9 p.m. ET to 8 p.m. So the gap is exactly 1 hour. 1 hour where the market breathes. That is a massive shift from the current setup, where trading effectively stops at 8 in the evening and does not restart until 4 the next morning. Nasdaq is also upgrading its data and analytics tools across all three exchanges to handle the surge in activity. The infrastructure work is already underway. They are serious about December. That is exactly where my take comes in. Here is the uncomfortable truth that most people are glossing over right now. Extended trading hours sound like a gift to the everyday investor. More access, more flexibility, more control over your own money. And in some ways, yes, that is genuinely true. But longer sessions have always favored those with faster data and sharper tools. More hours does not fix that imbalance. It just extends the window where it plays out. Long-term investors honestly do not need to change much about how they operate. But if you are someone who trades on headlines, checks prices at midnight, reacts to every move, this new session is going to tempt you. And temptation combined with thin liquidity is exactly where real money gets lost. My take, watch how regulators respond over the next few months. And if this does launch in December, do not feel any pressure to suddenly be trading at 11 at night just because the option exists. Having access to something and needing to use it are two very different things. If this breakdown was useful to you, hit that like button. It genuinely helps this channel reach more people who need to hear this kind of analysis. Subscribe if you have not already. And drop a comment below right now. Do you think 23-hour trading actually benefits regular investors, or does it just create more ways for the average person to lose money? I read every single one. Quick disclaimer. This video is for educational purposes only, not financial advice. Always do your own research before making any investment decisions.